Some of you are students of tax, and so you'd be interested in the nitty-gritty of tax. And some of you are students of development economics, and you'd be interested in some different aspects. Now, when I was looking at the topic, I realized that it's a full-house topic that should cover a few lectures. So all that I can hope to do is to provide a bridge and some foundation between these two issues. And it's necessary because my sense of it is that development economists frequently look at life and say, how can we soak the rich? And people who train in tax know that they will be advisors to the rich, and so look at how they must minimize. And so I'm trying to bridge this, and we can take the discussion forward as we proceed. But I want to start with some of the basics. I want to start with some of the basics, and the basics are the basics of fiscal policy that we sometimes lose sight of. And that is, the amount that we have to spend is equal to what we can tax and what we can borrow. Now, countries lose sight of this basic equation at their peril. And there are three countries that are very topical at the moment. The most topical of these is, of course, Greece. Greece has a very low tax base in spite of having very high tax rates. And why it has a low tax base is because wealthy Greeks don't pay tax in Greece. And for a whole host of reasons, including the way in which they mask their deficit to get into the euro, their borrowings have been very high. And the debates around Greece are largely the debates that seem to focus on Berlin and the power of German government and German banks located in Frankfurt, so that you'll see that the sovereignty of Greece is undermined, and that's very much the debate that takes place there. Another example that we can mention is Ghana, where in 2007 oil was discovered when the then president, the now late President John Atta Mills, turned open the taps in 2009. He said, oil should be a blessing, not a curse, because you need to read the history of West Africa to understand where it is actually a curse. But what happened in Ghana is that they started spending the oil revenues long before the oil flowed. And so Ghana, after many years of a struggle to recover itself, now finds itself back in an IMF program concluded a few weeks ago for $1 billion. And this will create enormous problems for Ghana, because the S in this equation is not only about what you can spend, it's also about the value you attach to your sovereignty. Now, when decisions are taken about fiscal policy, it's important that we, have a full perspective so that we don't look at numbers only. And from time to time we need major reviews, and the past Minister of Finance, Pravin Gordhan, put together a panel to review our tax policy, and it's headed by Judge Dennis Davis. And Judge Davis made a very important set of statements. He released a detailed report in December last year as a discussion document, and he makes a number of points in this report. He says that far from being merely a mechanical, technical exercise in economic analysis, tax policy is inherently political and ideologically contested, molded by the dynamic interplay between political values and culture. What can a society tolerate in terms of tax policy? And so in drawing attention to the fact that it is a political process, it's almost impossible to look at tax to the exclusion of the broader development paradigm that students like yourselves must be involved with. One of my gripes is that we don't raise the level of the discussion in the country about these kinds of issues. You get one or the other group claiming that they have all the answers, and I think that that's what makes it pretty dangerous in the current milieu. Of course, we have to try and answer what development is, and if we look at the trend lines in South Africa, we will see that it's rapidly increasing. Now, social protection, education, health, and housing and community amenities make up a large quantum of our spending. It's about 600 billion in the current environment. Now, one of the things that we should note is that health spending is actually not very high, and if we were to introduce the National Health Insurance Scheme, funding would probably have to increase to about that line over there. The question is, if you want to afford that on the spending side, what will you do about taxation? Because borrowing, I think, Keynes was correct, borrowing for capital is very different from current expenditure, and all of these items referred to in this graph happen to be current expenditure. It's a very important debate that will inform how we take these matters forward. Of course, it's also important to look at what cash transfers and other things do to South Africa. Now, if we look at this very interesting graph, and I have a bit of difficulty with it because, in truth, there should be 10 deciles and not 9, but this is Professor Leybrandt of Saldra at UCT. In 1993, about 30%, and just look at the poorest 2 deciles of South Africans, the poorest 20%, about 30% of what they received in households came from labor markets. Then you had remittances from people working in urban areas, sending money into the rural areas, and government transferred made up about 15% of the poorest South Africans. The shift to 2008, when the study was done, shows that if you look at the poorest 20% of South Africans, almost 65% on average of that comes from government transfers. The other thing that you would observe is that labor market contributions to poor households has actually dropped quite considerably. The question that I think every policymaker, whether it's on the tax or the development side, will be confronted with is whether this trend line is sustainable. So when we drafted the National Development Plan, I think we tried to answer the question in a bit more detail. And I'm just going to put up these 13, which are the chapter headings of the National Development Plan, in that endeavor to try and establish what our national priorities of development are. So there are those issues that you saw 2 slides ago. Oh no, that's going to take too long. Health, education, social services, and so on. There are those things, but I think the Planning Commission also recognizes that you need to build safe communities, so what you spend on police is part of development, because we know increasingly that community safety is an issue in poorer communities in as much as it's in wealthier communities. Human settlements and everything that goes with it. The way in which we position ourselves in the region is important, the rural economy is important, etc., etc. So if you go back to the NDP, the question of what the development priorities are is answered, and it's not just, because some of these would obviously be on the investment side, because if you look, if you look at economic infrastructure, for instance, all of the roads and rail and ports and energy infrastructure, as well as some of that sits between economic infrastructure and social infrastructure, such as water, sanitation, and so on, are all on the investment side. Now, when you look at all of those needs, and you go back to how dependent poorer South Africans have become on the state to transfer resources for their sustainability, or the sustainability of their livelihoods, I think we begin to get into a zone of asking a series of questions about who pays what tax, what returns there are, and what the challenges are. And one of the big challenges in South Africa is, of course, the Gini coefficient from a recent book called Inequality by Professor Anthony Atkinson. He's got this graph, and it's a very scary graph. It's scary because right at the bottom of his graph is, of course, South Africa, that has a Gini coefficient, which is a measure of income inequality, sitting just below 0.6. Now, it's always expressed as a fraction of 1. Of course, one of the interesting observations from this graph is that our colleagues in BRICS are all near the bottom as well. Now, why this graph is important in the context of tax discussions is not just to understand the development impact. It's also to recognize, and you'll see this in a moment, that countries that are more equal, that are more egalitarian in the way in which wealth is distributed, Sweden, Norway, Iceland, Denmark, are all, of course, Scandinavian countries. Add Slovenia, the Netherlands, Finland. Look at that group of countries. All of them tend to have a greater ability to have higher tax rates because nobody feels done in. Everybody feels that they have access to good public health care, for instance, good public education. They don't need to take their children into private schools or have medical aid for private health care. Those kinds of issues are very important. So understanding income distribution is fundamentally important to understanding how much taxes can be extracted from which parts of society. These issues, I submit, will always belong together in discussion. Now, one of the things that has been important in looking back on South Africa's tax history, and I choose to use as a starting point democracy. 1994 is that one of the big issues for us has been base broadening. I'll show you in a moment that we increased the tax take very significantly. In fact, you can see it here. Tax revenue moved from 113.8 billion to 986.3 billion. Now, this is a nominal growth, right? The economists amongst you would want to do a GDP deflator on this, but let's just take the nominal growth for a moment because it is still a very significant growth. And then if you look at tax revenues as from 23.6% of GDP to 26%, then you say company tax was at 40% in 94 and is at 28% now. So in the base broadening exercise, we're able to expand the number of companies who contributed and how they contributed. We can talk about that in some detail, while at the same time being able to reduce the marginal tax rate for companies. I think if you look at persons as well, it dropped from 45, it dropped to 40, and this year was the first increase, pushing it back up to 41. The number of individual taxpayers was 1.8 million, it's now 17.8. Companies, 456,000 to 2.9 million. Pay-as-you-earn registered employees, 178,000, now 424,000. And the number of VAT vendors, 455,000 to 674,000. Now, the issue of base broadening is very important because if you want to broaden the base, then what happens administratively within the revenue service and the way in which you communicate tax policy both become fundamentally important. This is broadly the composition of our taxes. You can see that corporate tax, bear in mind that this was happening in an environment where the rates were reducing. In 2008-9, this was when I, of course, left as finance minister. I take no responsibility for that. But that was a peak. We went into the recession from there, and it's been pretty flat since coming off that peak. Personal taxes have been more or less constant. VAT is a very reliable source of tax, and then beyond that you can look at the fuel levy, customs duties, and some specific excises. The finance minister calls those specific excises sin taxes, and then a few other taxes that obtain. If you want the pie chart, then this is what it looks like. But I'd just like to, for a moment, refer to the pie chart on your right, which is this one over here. These are actually deductions from the total. And because of an agreement struck in 1910 to create the world's now oldest customs union, we transfer each year an amount of some 51.7 billion rand to our neighbors. You know which countries make up the customs union, don't you? You know? Do you want to tell me? Botswana? Swaziland? Lesotho? Namibia? Yeah. People who take these decisions talk about the BLNS countries. But so out of our total tax take, primarily out of what we are able to get as excise duties and customs duties, a bit of the fuel levy gets transferred in the order of 52 billion. And this makes up a large chunk. If you look at Swaziland, for instance, I think this now accounts for about 69% of the budget of Swaziland. Lesotho drops off to about 61. Namibia and Botswana are in the 20s, but it's very significant to understand the role of SACU, the fact that this money is collected here and then transferred. I said I'd look at some of the international rates now. These are our rates in the three columns. Sorry. 28 is our company's tax. It's 41 now. Okay? So shoot me for the error. It's 41 now, and VAT is 14%. Now, in some countries, they don't quite have VAT. They've got something called general sales tax. It's not always comparable. But, you know, for purposes of argument here, just accept that the VAT and GST would be equivalent. Now you look at a country like Sweden, which has a lower company tax rate, but look where their personal income tax rate is, and look where their VAT rate is. Even if we look at a country like Brazil, Brazil is sitting above us on company tax, lower than us on personal income tax rates, and higher than us on VAT. You look at India, India's got a split company rate, depending on the nature of the company, 32-42. Personal income tax, same level, well, where ours was last year at 40%, and VAT of 12%. China, 25, 45, and 17. It's a very important issue to understand as well, because if we were to increase that very rapidly, then companies would tend not to invest in this country. So I know there's a view that says, just tax them. Why shouldn't our tax rate for companies be 60%? The chances are that those who are here are going to leave, and ditto. I'll show you in a moment what the distribution of personal income tax rates are. But I want to make the point that in the upper brackets of personal earnings, everybody takes tax advice from those of you who are studying tax. Yeah, whether as lawyers or accountants, you'll be the advisors in minimization. And so, you know, however you increase that number, you need to bear in mind that there's always advice available that will show people how to reduce that number. And our VAT rate has been in the news, especially in the light of the Davis panel just recently. But the question that all of you will have to answer for yourselves is whether these rates have been properly arrived at and whether they're sustainable in the current environment. Now, when you look at that VAT rate of 14%, you know, what policy analysts try and do is they look at any particular tax to understand whether the impact is progressive. In other words, whether at the higher end of the scale, people are paying more in order to cross-subsidize, or whether it's regressive. And flat consumption taxes like that, in the main, tend to be regressive taxes. So you say 14% for everybody on everything. You don't say some university professor would have to pay 20% VAT when they buy the same product. You don't say that. Everybody pays 14%. And what we have done is to zero rate a number of goods. And if you look at the list of foodstuffs, it's brown bread, maize meal, millie rice, dried maize and samp, dried beans and lentils, pilchards in tins, not sort of top-end salmon in tins. Milk, that's fresh and dried milk, rice, fruit and vegetables and eggs. And then paraffin and diesel. And then services, not all services, but education, residential rent, all transport, farming inputs, and all exports are zero rated. There's a very carefully considered list of issues. Sometimes the benefits don't accrue to where we want them to accrue. About 13 years ago, there was still VAT on paraffin. And we removed the VAT on paraffin, and because paraffin is such an important fuel source for very poor people. They don't have electricity, they can't afford LPG. Paraffin is fundamentally important. So ensuring that the measure actually had the desired effect was very important to us, and we, with StatSA and SARS, then deployed people to test the effect of that 14% price reduction in poor communities. We used informal settlements around the country, and almost nowhere did the benefit of the reduction of VAT or the removal of VAT on paraffin accrue to poor people. So understanding these issues is very important for policymakers to ensure that the benefits then don't accrue, because that 14% sits somewhere in the pockets of middlemen and women. Now, there have been a number of studies. The Davis committee itself has reported on this, and if people are interested, I'd like to invite you to download the Davis report of December, because it's released as a discussion document. But they've looked at VAT, and they say that given the reductions in the VAT rates, it's actually pretty progressive in the way in which it's structured. There have also been two other significant reports. One, a World Bank report on fiscal policy in South Africa, released a few weeks ago. It hasn't had much publicity. It also confirms what our VAT system looks like. And then about 10 days ago, the Organization for Economic, OECD, Economic Cooperation and Development, released a survey on South Africa, and they also confirm what's happening to VAT in South Africa. It's an important point. And I'm raising it because if we need to take this discussion forward, ensuring that you don't lose the progressive content of a normally flat tax, which could be regressive, like VAT, is very important. There are other equity enhancing measures. There are two so-called wealth taxes we have in South Africa. The one is capital gains tax. It's now 13 years old. There's been an adjustment of rates. It's lower than personal income tax rates, both for individuals and trusts and also for companies, but that's one measure, CGT, and the other is a state duty levied at 20% on the dutiable amount. But if we want to understand the progressivity of our tax system, then it's to the personal income tax rates that we look. Now, people earning below the number of 73,650 Rand a year pay no personal income tax. Now that's quite an important number. In 1998, that figure was 18,500 Rand. So to have moved from 18,500 Rand to 73,650 is very significant. But what it does is to signal to poor households in South Africa that we aren't going to burden you with tax. Of course, there's going to be an issue. I mean, when you look at that Gini coefficient number that we looked at earlier, it is net of what you do in the tax system, which is as high as it is. But what you try and do in equalizing, that 73,650 Rand, and then you get the rates up to 189,900, it's 18% of each Rand. That's above the 73,650. And then the rates move. There's a rebate, and then 26, 31, 36, 39, and 41%. So the maximum marginal rate of 41% after, I mean, it's 208,000 plus 41%, and it kicks in at 701,000. Now, there's a very important debate about whether it doesn't kick in too early. But it's a debate that we must have as South Africans. It's something that that the OECD commented on in their report. It was widely reported in the press in South Africa about 2 weeks ago or so. The OECD suggested that this rate be looked at. And there are a variety of ways of looking at it. You could, for instance, split the rate. You could keep that rate at 41 at that level, and then you can say above R1 million it has another rate, etc., etc. The big issue is whether you can administer complexities in rates. And the other part of base broadening was that we reduced the number of tax brackets so that it's easier to administer. That has happened over the past 20 years as well. So you've got to look at these issues together. But the big point about this is that what happens to personal income tax in South Africa makes it very highly progressive. Now, there's an adage. Tax administration equals tax policy. Now, you will have people dream up all kinds of fancy ideas about what to do with tax policy. And I think the argument here is if you can't administer it, it's not going to work as a policy. If we go back a few slides to Greece. You see, Greece has a higher personal income tax rate than we have, and they've got a much higher VAT rate than we have. But Greece's tax revenues are substantially lower than ours in South Africa. And the reason is that if you don't have the administrative capacity, you're not going to be able to do it. Now, sometimes people argue that if you look at VAT, there should be like 5 or 6 different VAT rates. So, okay, there's a 0 rating, and then you must say rate number 2, which should be at, say, 8%, includes white bread. Rate number 3, at 14% can include some items. Sorry, if you are a student, if you're a student at UJ, then you would say that beer must have a 2% VAT rate and so on. Yeah, these are kinds of arguments people put up. And then they say for luxury goods, you must have multiple split rates. The key issue, and this I submit to you, is the test of tax policy is whether you can administer it. Now, there are a number of questions that arise. If income taxes are progressive, whether they should be progressive, flat, or dual, or just non-existent, because there's a very important argument, and the argument is traced back to Milton Friedman as well. Have a single rate of tax. Doesn't matter whether you're rich or poor, just have one rate of tax. It's a very important question about whether you can administer it, and of course whether it's fair. Should foreign source income be taxed? I serve on the board of a company based offshore. They pay me in their currency. Should it be taxed here or not at all? Because in the principle of fairness, there's a fundamentally important debate. I've just got these up here as questions so that students will engage with these kinds of issues in the fullness of time. And this is a question about indirect taxes, whether it should be imposed at uniform or differentiated rates. If differentiated, how should externalities and regulatory policies be taken into account? And bear in mind that one of the points raised in the OECD report, not about tax, but generally about South Africa and business in South Africa, is that there's a lot of regulation that makes it very difficult right now. So how do you impact that in your tax calculations? Should small businesses be taxed differently? If so, at what rate and why? There's a big debate in South Africa. We collect the bulk of our taxes at a national level. If you go to the United States, general sales tax is levied at a city level. In South Africa, at provinces, we allow provinces motor vehicle licenses, gambling taxes, and so on and so on. These things are set out in the schedules to the Constitution. Local government, of course, levies primarily on property prices, and then there's a surcharge on electricity and water and so on. Those would be the main sources of local government revenue. But if you want to do this thing, if you want to say, well, we need a bit of diversity in the country, allow, say, the Eastern Cape to have a different tax rate for companies from what Gauteng has. Well, will they collect it? And if they don't collect it, will you have to transfer more money for those public services like education, health, and so on? Or might it be easier to collect at a national level? These are not resolved questions. They remain fundamentally important questions in South Africa still. Should taxes be lighter or heavier? One of the anomalies in South Africa is that we have in our corporate tax rate something called a gold mining formula. It was introduced in 1913, and it's very hard to change. One of the reasons that it's hard to change is that costs in mining, like sinking shafts, shaft sinking is incredibly expensive and takes a long time to amortize those kinds of costs, so they exist. But should it just be taxed at one rate? There are, of course, unresolved matters. From time to time here in Gauteng, there's a debate about acid mine drainage. Right. And the acid is formed in the water, primarily in disused mines, right below where I'm standing now. Disused mines, and contact between the water and the air produces the acids. The people who mined here are long gone. The shareholders have taken off the table what they needed to. Whose responsibility is it? Should something be left for those kinds of environmental disasters? These are all issues that must be resolved in the fullness of time. And as we think about taxes, it's important to take account of that as well. And if you look at mining right now, the announcements last week by Lonman and by Anglo-American about the number of jobs that will be cut because the commodity prices are as low as they are and mining is as unprofitable as it is. How do you resolve these kinds of issues? What do we do about the informal sector? It's there, it's big, it's burgeoning in South Africa. Should we tax it? Should we leave it? Should we encourage formal to become informal? What do we do about spaza shops? What do we do about the general informal sector in South Africa? These are questions. And I'm saying that part of the answer is in the heading to this slide. Tax administration is tax policy. If it's too difficult to administer and you introduce levels of complexity, I mean, you know, if you look at the VAT system in South Africa, and one of the things is public transport is VAT-free. And fuel prices are VAT-free. Can you imagine standing outside campus here, getting a taxi to Soweto, and the conductor wants 7 rand, and he wants VAT on that because he'll have to pay over the VAT. We'll have chaos in this country. You'll never be able to administer it. So some of these things have found their place in tax policy because it's impossible to administer. It's either going to pocket it and do in the passenger, and I doubt whether we'll see much of what happens. Now, let's go back to that quote again. I hope you can see it. You see, far from merely being a mechanical, technical exercise in economic analysis, tax policy is inherently political and ideologically contested. Who pays what? What do the rich pay? What do the poor pay? How do these things square up? Why do these matter? And in that contest, it's very important how people feel about themselves and their ability to pay. I touched on inequality in South Africa. I showed you what the Gini looks like. It has an impact. If you look at the Gini coefficient, if you look at who receives the bulk of cash transfers in their homes, and you look at, let me just go back. Sorry, I just want to go back and say something about the numbers here. Personal income tax payers, there are 15,560,000 thereabouts registered. And of that, almost half of registered personal income taxpayers find themselves earning below 73,000. And then the number between, in that first bracket below 180,000, takes us up to 74% of all taxpayers. Okay? Now, this number includes the bulk of public servants, for instance. Virtually all of our police, all of our defense force, all of our teachers find themselves in those tax brackets. And so the pyramid, you know, is actually pretty flat because the numbers in this area over here are incredibly low. It's important to understand what the consequence of that reality is, and it's important to understand it in the context of this quotation from Judge Davis. So part of what we need to understand, and it impacts on the way in which people pay tax. Do they feel that it's fair? One of the challenges in South Africa is that the minute people get to a certain income level, they opt out of many of the services, including using medical aid rather than standing in queues at public hospitals. It includes sending their children to former Model C schools or private schools and then paying for it. There are many parts of more affluent South Africa where people pay for their own security, and so they feel unfairly or hard done by because there isn't the return for what they pay in taxes. It's an important political consideration, therefore. The second issue that people always look at is efficiency. This is why the role of Parliament, the ability of Parliament to make laws and oversee the role and position of the Auditor General and other Chapter 9 institutions are very important, because what the Auditor General will look for is value for money. Is the money efficiently spent? You all have read newspapers over the past while. You know what the topical issues are. And the question of efficiency arises as the pictures of certain places come up. I don't know how to pronounce this. I think citizens always ask this question as well. Is the money that is being taken from us as taxes going irregularly, unlawfully into the pockets of some people? Or is it being efficiently used? Because if I feel that I'm enriching some people, then my desire to pay tax is going to be significantly reduced. So when Judge Davis talks about this contested terrain, you have to begin to factor in issues like this. That value for money issue I've touched on. And then the consequences. Consequences are important. What happens if I don't pay? Would anything happen to me? There was an interesting case in the Pretoria High Court. No, it was in a magistrate's court somewhere in Johannesburg last week. A certain driver first covered up the number plates on his car and then drove through the gantries. And he refused to buy an e-toll tag. And then he falsified the number plates in his car. Put on false number plates, drove through the gantries like 178,000 times. It's fraud. And there's a debate now, why is he being charged for not paying his e-tolls? But of course there's fraud, there will be consequences. The magistrate felt that a higher court will have to deal with it because of the severity of the crimes. If there are no consequences, nobody bothers. So these 5 issues, I think, are very important. They're hard to measure, but they are important in the judgment of how tax policy is shaped in society. Now, there are a number of challenges that we face with tax administration always. One of these is the legislation, and it's very important that Parliament be able to make good law. Now, who knows how old our tax law is? The Income Tax Act? 1962. Act 58 of 1962. So, with 1 or 2 exceptions, I think that act is older than the rest of you, the rest of us in this room. But trying to drop it for something else is very difficult. We've looked at it, we had a bunch of advocates sit with us and say, how do you do it? Because there's what's written in the law, amended at least once a year, and there are a number of precedents provided by the court. And when you look at the body of tax jurisprudence, it's all of that. But what's very important is that Parliament must be competent to oversee and pass good law in taxation. Again, I leave it to the judgment of students about whether this Parliament does that, or whether they'll even get through the tax laws in this year when they pass the points of order, but that's a debate for a different day. But if you don't have good tax legislation, I think the tax administration can't actually do what they have to do. The second issue is there is this variable. I mean, I gave you approximate numbers for corporates, personal income tax. There's also a number for VAT vendors, which is increased. But, you know, it's a very difficult issue to try and deal with because of small businesses and so on. And the more they duck under the radar, especially in respect of VAT vendors, it becomes difficult. And then, if you look at one of the issues in VAT is exports. And one of the most abused systems is in VAT is exports, because there was a company that claimed to export ladies' bras to Lesotho. And in 1 year, they were exporting about 2 million bras to Lesotho. And by our calculation, that gave every woman in Lesotho from one supplier something like 10 bras a year or something like that. It was an uplifting story, but it didn't fly. The company was caught. So knowing these issues is fundamentally important. There are the vendors, and VAT vendors, I think, would be included in that. I didn't check. Can you see?
Yes.
Oh, okay. There's this thing called the tax gap, and it's one of the most difficult issues. Does anybody know what they talk about as a tax gap now? It's kind of uncollected taxes. It's there's a number of about 6.5 billion rand. Now, it's very difficult because you need to be able to calculate and say, if we were operating at 100% efficiency, we would have an additional 6.5 billion. But 100% efficiencies are not going to work, partly because you've got minimization, you've got avoidance, which is legal, and evasion, which is not. And when the Revenue Service puts out that number, people say, these ones are completely inefficient. They can't come after me because they've got so many bigger fish to fry. So understanding the tax gap and communication is very important. There's the issue of modernization, and we have been pretty good at modernizing, and perhaps the biggest change in our modernization system is online filing for individuals and corporations. It's taken a lot of headaches out of the system. You can get your responses in short time. If you have something due, it happens in short time. It was very expensive to shift to an IT-based tax system, but I think the dividends are self-evident in the efficiency of the system. There's criminality, which is always a problem. Which crimes do you go after? Which don't you go after? Do you take the broken window principle and go after those who break the first window? I mean, if you look at some of the exchanges in this country, let me mention an example of somebody who's facing criminal trial, Radovan Kretscher. And you look at the amount of money that they talk about changing hands and so on and so on. Criminality is a big problem. All of that is below the radar screen. There's this thing that we don't like. Lifestyle audits. What gives the Revenue Service the right to know how I spend my money, where I live, what whiskey I consume, what cigars I smoke, how expensive my suits are, etc., etc. But it needs to happen from time to time, and it's one of those things that happens across the world and people don't like. And then there's cross-systems verification. One of the issues that SARS goes back to most frequently is e-natus. The Vice-Chancellor, Professor Rensburg, drives a BMW X5. Can he afford it off his disclosed income? If not, where did this car come from? Where do children go to schools? If the children go to St. John's and Rodin and schools like that, is it afforded off the income that is disclosed? Does the property register reflect a purchase of a house in Westcliff or some other fancy suburb at a multiple of millions of rands of the disclosed income? How much water is being consumed? Because water and electricity are very interesting issues. You can't be poor and use up tens of thousands of kiloliters a month. It's when you have swimming pools and 3 cars to wash and big lawns to water and irrigate and so on and so on. All of those things can be cross-verified. And it becomes fundamentally important that we do these kinds of things from time to time. You can see it as well from bank accounts and credit cards and what people are spending on, and these things can be done and need to be done. And bear in mind, you know, for people who follow crime stories, the police in the United States could never get Al Capone. Al Capone was taken down by the Inland Revenue Service, followed the money, was the story. And it's still very important because when people have money that they haven't properly earned, they tend to throw it around quite liberally. International collaboration, this is one of the problems we have. You know, there are 4, maybe 5 large tax advisory firms. Ernst & Young, KPMG, Pricewaterhouse, and Deloitte. Go to any country in the world, go to Kazakhstan, Uzbekistan, Afghanistan, the United States, Pakistan. You'll find the same companies existing everywhere, and they exchange because they have good, strong analysis. And they will advise companies wherever. And they advise companies on where tax is lowest. And so, you know, we've had this debate in the G20 and elsewhere about tax havens and so on. So there's a lot of collaboration because they have the same clients. But governments don't collaborate to the same extent. So there's an unfair advantage, and so working at this issue is fundamentally important in collaboration. And then the skill set. And one of the things we did in SARS, when we introduced the SARS Act in, it must have been like 1997, to take SARS slightly out of the public service norm so that we could employ chartered accountants and other skilled people in the revenue service. There's a clause in that act that says the South African Revenue Service will be outside the norms of the public service but within the confines of public administration, so that you can employ skills. Because if the private sector always has better skills than you have, you won't collect the taxes. It's as simple as that. So the skills debate is fundamentally important for tax administration. Otherwise, you'll just want VAT because it's easy to administer. And then this thing called the social contract, which goes back to the way in which Judge Davis describes the nature of this contest. Do people feel that democracy enhances their lives? Do they feel that working hard and earning a little bit more is sufficient incentive? Because if it doesn't, then people opt out of the system through a variety of ways. So social contract and satisfaction is fundamentally important. It's important for the general administration of government in democracy, but it's fundamentally important to where you can set your tax rates. And I go back and say, look at that Gini coefficient, look at the Nordic countries, and look at where all of their tax rates are, because the social contract is deemed to hold and operate quite differently there. So I'm going to leave you with a few takeouts. The first of those is base broadening, and I showed you in the numbers what happened between 94 and the present. The second is that fundamental maxim, tax administration is tax policy. The third is the impact of inequality over tax policy choices in general. The fourth is the constraint of external rates. In fact, one of the countries I should have put up on that table is Mauritius, because Mauritius' corporate rate was incredibly low and zero for some. And a number of South African companies found themselves then headquartering themselves in Mauritius because that's where they would pay tax or not at all. With the added advantage of when executives and their wives and children go to Mauritius to look after company business, they spend 2 weeks at Le Tours Rock or some fancy hotel. There are balances between what you do as direct and indirect taxes, and balances, of course, in the rates. It's an ongoing discussion. And part of what a smart tax administration needs to do is to feel their way into this. There's that feel good, which is nothing to do with tax. Am I getting value for the money I pay? Regardless of how good the revenue service is, these issues always impact. And then there's what I call the IRA, Intelligence, Research and Analysis. And I'll tell you a little story. One of the debates that we've always had with the Ministry of Health is how much to tax cigarettes. And health people would say, as a disincentive to smoking, you should tax cigarettes at 200, the specific excise duty should be 200%. And then we actually would deploy people to talk to the skellims, find out what's happening on the ground. And we would then be informed of what the going rate is for a smuggler. If a smuggler is going to charge 60% to carry a carton, gross, across the Limpopo River out of Zimbabwe, if he is charging, what did I say? 60%. If you're charging 80%, the smuggler's in money. If you're charging 58%, he's going to battle. You don't want the smuggler to operate, because if he brings in cigarettes, he's going to take out something else, or he's going to use that route to bring in contraband, be it drugs or anything else. So understanding this in an intelligence context is fundamentally important. Because if you don't know that, then you're going to be Mickey Mouse as a tax administrator. And once you understand those issues, undertake the research. I don't want to quibble about those who followed me, but if you look at the increases in specific duties on cigarettes in the past few years, and you look at the degree of smuggling, and you look at these discussions about why the police must now escort tobacco vans delivering, it's all part of the same thing. You need to be smart about how you tax certain things, and that intelligence, I think, is not something that textbooks tell you about. But you need to be able to take advice, engage, and take appropriate decisions. And then enforcement. There's no point. If you can't enforce, if you don't have behind yourselves a criminal justice system that actually operates, and part of what we've had to do in the context of SARS was to create special courts where the prosecutor might be a chartered accountant. So that when a company comes there and they haven't paid, it's not the old prosecutor who this afternoon will be prosecuting somebody for drunken driving and then thereafter somebody for shoplifting. These are specialist courts that deal with taxation, so that the judge sitting there is informed, frequently an advocate, and the prosecutors know, because it's part of the enforcement. If there are no consequences, you're not going to be able to administer tax anywhere. So that's where I stop. I'll leave it on these 8 takeouts for you and invite your questions.
The University of Johannesburg. Rethink, reinvent.